Swiss chocolate. Ferrero Rocher, are they Swiss? No. These ones, Lindor. Yeah, he'll love these. Swiss banks used to be like Swiss chocolates, the envy of the industry. They were the gold standard for private banking, but since the 1990s, they've struggled.
This chart shows just how much things have changed. In 1996, there were 403 banks in Switzerland. By 2019, 157, well over a third, were gone.
So what's going on here? Have Swiss banks lost their shine? Hi Geoff.
Hi Tom.
How are you? We're set up over here.
Okay, great.
Now I've brought you some Swiss chocolates.
That's
because
very
I
kind of
know
you.
that you haven't been to Switzerland for more than a year.
No, it's been a while.
And I want to bring a little bit of Switzerland to you. And but in return, you've got to talk to us about Swiss banks.
With the
Squawk Box Europe anchor Geoff Cutmore has interviewed the CEOs of Switzerland's two biggest banks for more than 20 years. I wanted to use his experience and insight to learn how the industry has changed.
Swiss banking has changed incredibly over recent decades, but in the last 10 years, I think you can see that shift has accelerated. The US has been pivotal because of the financial and economic pressure that they've been able to bring to bear on not only the Swiss government, but also the Swiss banks per se.
Back in 2010, the US government signed a new jobs bill, which included a section called the Foreign Account Tax Compliance Act. It required American citizens and businesses to reveal their foreign assets, which would then be subject to taxes. To make sure they actually did this, foreign financial institutions had to share details of accounts held by Americans. If they didn't, they'd face a 30% tax on all payments originating from the US.
This was a problem for Swiss banks, which had a reputation for secrecy. Before this, wealthy individuals from all over the world could stash their money into Swiss bank accounts with total anonymity.
Traditionally, Switzerland used to be one of those places where the banks kept your information very secret. They didn't share information with other governments, and that was ultimately part of the Swiss banking model, which made it incredibly successful. Back in 1934, the Swiss government passed a Banking Secrecy Act that ultimately made it an offence for Swiss banks to reveal information about clients to foreign governments. And that in a way sowed the seeds of massive growth in the Swiss banking system. Some of that history, as you know, is very checkered. The Nazis may be hiding gold in Swiss bank vaults, African dictators and despots that have siphoned off state funds. That money has found its way into the Swiss banks. The Swiss, for their part, would probably hold up their hand and say, look, we can't be responsible for where the money comes from, but that answer is not good enough anymore.
In 2007, a whistleblower from Switzerland's largest bank, UBS, exposed to US authorities the degree to which Swiss banks were helping American clients sidestep tax collectors.
It was a revelation that the authorities in the United States could not ignore, and they brought it immediately to the door of UBS and to the other Swiss banks that had US citizens' accounts that were clearly being used for nefarious purposes. That resulted in years of litigation between the Swiss banks and US authorities, which ultimately resulted in billions of dollars worth of fines being paid out.
85 Swiss banks paid more than $5.5 billion in penalties, but Switzerland's two biggest banks paid the lion's share. UBS settled for $780 million in 2009, while Credit Suisse was fined a whopping $2.6 billion in 2014. As regulators paid more attention to tax compliance, Switzerland's share of global asset management fell from around 9% in 2004 to slightly above 4% in 2009.
What's more is the Swiss government's decision to exchange bank information with the US opened the door for EU member states to begin their own judicial investigations. Those resulted in further large out-of-court settlements.
How did UBS and Credit Suisse manage these big payouts, and what did it do to the direction of their business?
Ultimately, they just had to pay the fines, but the consequences obviously has been a significant hit to earnings. and the shareholders don't like that, and the management don't like that. So where the banks have gone next is they've had to go out and try and find new markets, new opportunities. And as you look at the world at the moment, there is one clear area where the opportunity set is growing. That is in the emerging markets of Asia, particularly where there is a growing middle class that has savings that need to be managed.
When you exclude China from the mix, Swiss banks Credit Suisse, UBS and Julius Baer are among Asia's 5 biggest wealth managers. In Asia, Singapore and Hong Kong's banking laws have propelled their status as offshore financial centres. According to the Financial Secrecy Index, they now fall right behind the Cayman Islands, United States and of course Switzerland. Between 2009 and 2014, at the height of the tax compliance crackdown, net new assets managed in Singapore grew by $40 billion and $285 billion in Hong Kong. In the same period, Switzerland experienced an outflow of $135 billion.
I think the Swiss government would now say that they are a lot more open, in fact more open than they have been for decades. FINMA, the regulator, would probably also say that the focus is now very much on Switzerland operating a globally transparent information exchange.
But has Switzerland really cleaned up its act? The Panama Papers leak in 2016 revealed that Switzerland's 2 biggest banks were among the top 10 banks using offshore accounts to help their clients hide their wealth.
The problem is that I think a lot of critics would say that the Swiss have been very slow in opening up their banking sector, that there is still too much secrecy, that the process for getting that information is a little too slow and a little too onerous.
Toward the end of 2018, Switzerland began automatically sharing client data through a tax transparency forum under the Organisation for Economic Cooperation and Development. However, less than 12 months later, Swiss banking was embroiled in yet another scandal. Credit Suisse's CEO was forced to resign following allegations that the bank had spied on a former executive.
The issue for the markets, I think, at this point will be how credible are the results of the investigation.
Things didn't get much better in 2021 following the collapse of US hedge fund Archegos Capital Management and UK finance firm Greensill Capital. Credit Suisse had provided financial backing to Greensill as it began to struggle, a miscalculation that could cost its clients up to $3 billion. The Archegos collapse cost its lenders a collective $10 billion. UBS says it lost $774 million from trades linked to Archegos, but Credit Suisse took the biggest hit. It was forced to raise nearly $2 billion in fresh capital and cut bonuses after the failure. Both Credit Suisse and UBS are hoping that new management will arrest these issues.
That money has to be borne, or the loss has to be borne by the shareholders ultimately. And I think what you've seen in the share price performance has been a reflection of some of the market's anger about what it's perceived to be either mismanagement or a misunderstanding of risk. So this is just about doing good basic banking. And unfortunately, the experience of both of these cases has suggested that there is still some improvement required.
Okay, so at this point you might be thinking that Swiss banking is finished. Fertig, fini, finito. Well, unsurprisingly, Swiss bankers argue that Switzerland's differences still provide them with advantages over their rivals.
What ticks the box still, I think, for Switzerland is you've got a very stable political system, you've got Swiss neutrality, Switzerland is not an EU member, so you somewhat escape that oversight from Brussels. When you are perceived in Europe to be the ultimate safe haven destination for capital, people are prepared to take the additional costs that may come with parking money in a Swiss franc account.
Public perception is also positive. In a recent international poll on the reputation and quality of Swiss banks, they were rated by most respondents as good to very good. That's more positive than German, British and American financial centres.
So has the decline in Swiss banking been overblown, or have they lost their status as the premier banking financial institution? Which is it?
Well, I think, to be honest, it's probably a bit of both here. Overblown, probably. I don't think that anybody looking at the state of the Swiss banking industry at the moment would say that this is a sector that is in decline. I think there's still plenty of life in the Swiss banks. But what I will say is I think as a result of many of the scandals that we've witnessed over the last decade, and because of what's happened with interest rates, the Swiss bankers are going to have to work a whole lot harder to justify holding your cash. Probably shouldn't give them too much brand presence, but they are Swiss chocolate.
And when you go to Switzerland, will you bring me back some chocolates as well?
Really? Okay. That's a deal.